Welcome back. We're here for our third panel now. It's finance and how it triggers sustainability and fashion. I'm very happy to be here with 4 experts on the topic. With me in the studio is Ullrich Hartmann of PwC, and then joining us via video are Vicki Kalb in London from USB, Dr. Andreas Wagner, and Frank Wächter. Thank you guys for joining us here today. What I'd like to do for starters is to introduce yourself quickly to the audience, because you know better than I do what it is that your expertise is in, and then also answer one quick question, and that's what's your first fashion investment piece? I don't necessarily mean a luxury watch, but rather something that you've had for a long time and that you're probably planning to have for a long time. So, Victoria, you being the lady in our panel, why don't you get a head start?
Thank you. Thank you also for having me on the panel today. My name is Vicki Kalb, Head of European ESG Research at UBS, as well as a Senior Global Analyst on that team. And our team focuses on integrating ESG issues, and by that all I mean is that we examine how sustainability considerations could impact markets and companies. And in terms of your question, actually, it is going to be a luxury item. It's a Chanel suit from my grandmother that I estimate she bought in the 1940s, and I will probably never get rid of.
Awesome. Those are to hang on to for forever. I understand. Frank, why don't we move on with you?
Well, also good afternoon from my side. Good morning from wherever you listen to us. My name is Frank Wächter. I'm working for Puma with 5.2 billion euro sales in 2020. Puma is the clear number 3 sportswear company in the world with a history dating back to more than 70 years. I'm responsible for all treasury and insurance topics within the Puma group. I'm an active member in German Treasurers Association, and I'm working in a working group from the United Nations called Financial Tools, a United Nations fashion charter on climate change. Here I'm focusing on supply chain finance, and let me go to that favorite fashion piece. It is of course related with sports. How could it elsewhere be? But it's not football, which is so common at the moment. It is related to mountain biking. It is a t-shirt I got awarded, let's say, when I did my first Transalp crossing from Germany to the Garda Lake in Italy. And that I keep forever because that was a big award I done for myself.
That sounds pretty awesome. Thank you. And then Andreas Wagner, why don't you introduce yourself too?
Yeah, hello. Thanks for having me here. My name is Andreas Wagner. I work for UniCredit in Germany, Hypo-Vereinsbank. I'm heading the division on promotional loans, startup and succession financing. And I'm heading also the practice for sustainable finance in Germany and Western Europe. We are, as a bank, pretty active in this field in sustainable finance, ESG-related business since many years, and really in Europe among the leading banks. Coming to my favorite clothing item, fashion item, is actually not difficult. It's Bavarian leather trousers that I inherited from my grandfather, and that is from 1930. And that I will never give away, even if I refused various attempts on the Oktoberfest by some probably American tourists or others to buy it, basically for a horrendous price.
I was going to ask you that, do you still wear it? But apparently you do, right?
Of course. Of course.
Great, thank you for that. Last but not least, Ullrich Hartmann.
Thank you for being here with you. My name is Ullrich Hartmann. I'm a partner at PwC, PricewaterhouseCoopers here in Frankfurt. And I'm leading the sustainable finance business inside PwC for Germany and for EMEA. Sustainable finance may not be aware for everyone or clear for everyone. So it's what we are doing here is that we are supporting and advising banks, insurance companies, and asset managers to help to drive the transformation that is led by sustainable finance. So helping them to implement mainly loss of regulation. That's my topic here regarding fashion. Far away from luxury, let me say it in that word. In my private life, since I'm 7, I'm doing everything around boarding. So windsurfing, kiteboarding, snowboarding, sometimes skiing. And there's one brand inside this surfer industry that is Quicksilver from the beginning of this, let me say, sporting event. And I'm collecting everything that is from Quicksilver. So I have tons of T-shirts and shorts and all these things. I like it very much.
Do you put them in a little shrine on display, or is that more of a private thing that you have going on?
Not that way, but in my shrink at home.
Nice, thanks for that.
Thank you.
So money can be a powerful tool, and it can be a change agent for the fashion industry as well. Sustainable finance, for example, can help foster a brighter future in fashion when funding is only granted to those who adhere to better practices. And what better city than Frankfurt, the capital of banking, to discuss what requirements must be met in the future to push the envelope on sustainability. You've already said it, sustainable investment doesn't mean something to everyone. So why don't we get a head start and discuss what impact investment is, targeted investment to create lasting positive effect? I think Vicki wanted to start on that one, if I'm not mistaken.
Sure. What I would say on that is impact investing has become much more widespread. The actual definition, I think, is a lot less clear because historically, impact investing was a very specific financial term, and it was perhaps if you wanted to invest in clean water, sanitation, and emerging markets. But what we're seeing now is that impact investing is becoming very, very widespread. And the definition, I think, can be not clear, or it's not entirely, it's not entirely obvious what is meant by impact investing. So from our perspective, what we do want to see is a very clear communication around what is that investment trying to achieve? How is that a target going to be met? What KPIs are being considered? Without that clarity, it's very difficult to form any opinion about whether that might be successful.
Okay, yeah, that's plausible and makes sense. Frank, I think you wanted to comment on the fact that in the long term, unsustainable companies will have an issue.
True, and this goes back to the history we have done with sustainable financing, because 5 years ago we went live with a sustainability-linked vendor financing program. And at that time, we kind of had to explain, why are we doing that? Isn't that illusional what we are doing? And still today, corporates like Puma see a chance to get a positive impact, not only on a reputational effect, but also on a margin effect when we are doing ESG-linked financing. But I think in 3 years from now, corporate with a non-green financing will get a malus, do have to pay more from and that is why we see also from a financing industry, and I have a couple of bankers around me, from the financing industry, we will see a clear trend, and that will not be greenwashing. That will be very soon green getting the new normal, and even more, everything what is, let me call it brown, is bashed, meaning that they have to pay more, that these companies do have problems in getting enough investors, because that is just the new normal. But in effect, that is lead to what we intend to do to a greener society.
Let me jump in there real quick. When you say that in the next 3 years you won't be able to afford not being green, would you say that there has been a tipping point to that development? And if so, what's been the driving factor behind that?
Well, the tipping point is what happens around us. I think nobody in this panel, nobody listening to this would ever doubt that the climate change is happening. And for everybody, it is also clear that for climate change, there is a requirement of huge investments. And we are not talking about billions, we're talking about trillions of investment. And these investments have to be financed. And that is an enormous, enormous target which we are facing all together. And this is the turning point. And when you need some proof around that, you see more and more effects which are happening on the climate around us. We have heat periods, we have thunderstorms, we have all that. So, and that is kind of now getting common sense, and the consequences of having to invest is more or less clear for everybody.
Right, I can see what you're saying. I think, Ullrich, you have a bit of input for us here in terms of the regulatory that is also pushing the topic.
And it's directly linked what Frank had said. I guess there's a lot of pressure from three corners. First one is the overall population. Since Greta Thunberg has arrived on the continent, I would like to say everyone is looking to products and all these things that should be sustainable in the future. So I would like to say 5 years ago, no one was really interested in having green banking products, having green real economy products or something like that. But now it's of the awareness of everyone in the population. And that's the first point. Second point is that the government is putting pressure on the table. The German government has told us in 2019 in April in Berlin that they want to develop the financial market in Germany to the #1 sustainable finance market. So there's also pressure from the government. And the main pressure I would like to mention, as you mentioned before, is regulation. So when the European Union has identified that they will have problems to reach the old Paris goals, they put a regulation on the table that is called the Sustainable Finance Action Plan in Europe. 10 action plans with lots of regulation that are steering especially the financial services industry in that way that they need to identify which project they are financing are the green ones, that is good, and which one are the brown ones that should be not so good. And in the end, this regulation, for example, the taxonomy from the European side or the ECB guideline or the German BaFin guideline, they are pushing this transformation into a green industry in the future, using the banks and the whole financial services industry as a transformator to drive this transformation. And that is, from my point of view, the most important thing, where I also see that this is really a long-term transformation because it's coming from the population, from the government, and from the regulators, from the market. So everyone is steering in the sustainable direction. What makes me believe that this is really a long-lasting transformation for, I believe, for the next 10 to 20 years.
It sounds quite promising. I think all of you are outlining a very positive outlook on the near future. I mean, we've got the elections coming up in the fall of this year, and I sometimes feel like everyone can agree on the green goals, but the road to that is still quite long, because when it comes to the consumers actually paying more, when it comes to regulation really being pushed for, you know, we're not at the end of what can be achieved, but really need to roll up our sleeves and get things going. I think, Andreas, you are going to comment a little bit on ESG and how that will be a game changer for the entire financial industry, right?
Yeah, happy to do so. But before, I would just like to quickly comment on your previous question, the driving force. I think also the Sustainable Development Goals of the United Nations in 2015 were an important milestone, which you find pretty frequently now in company purposes, in objectives, even in KPIs for products. And this, together with the climate discussion and the regulatory movement, specifically on EU level, and probably the change of business leaders from a pure shareholder approach, specifically in the US, to a more stakeholder approach. That's more or less where the driving force is. And But let me also highlight that we are talking sometimes a bit too much maybe about the green or climate, because we frequently are forgetting the S. So really social, and there's so many important topics in that aspect. And as you know, there is a social taxonomy in the making, yeah, behind the green taxonomy. But for banks or for financial institutions and our clients, it's for sure a game changer. Actually, ESG is everywhere. It's on the investment side. You were just mentioning social investments or impact investments. It's on the corporate financing side. It's on the transaction banking, and even on the level of the retail clients, when you can measure your own CO2 footprint, when you can use sustainable credit cards and so on. And when we talk about corporates, I think it's very important now to move into a stage where we differentiate between the needs of the different size of corporates. I mean, Puma is a showcase. They are very, let's say, advanced, yeah, in their KPIs, but it's also a very big company. They have specialists, but you know, in Germany we have a very big SME and mid-cap segment, and now we need to take care to begin to take care also about them that are too small to issue a green bond or a green, let's say, you know, ESG-linked very big loan. So what we are doing is now is basically we're differentiating very much in how we advise between small and large corporates. And secondly, we are differentiating very much between the industries. Because the needs, for example, for the fashion industry, the requirements, the driving forces are very much different from other industries. And I think it's important for bankers to be aware, to know that, to be trained in that, and to be able to discuss on the same level, because it will entail a change of the business model of our clients. That's what we are doing at UniCredit.
I'm going to ask you about the social taxonomy that's in the making, the regulations on that, or the legislative on that. Not everyone might be familiar with that. Can you just quickly elaborate on that concept?
Actually, Ullrich is the specialist on the regulatory side,
Well,
but I try to. I
mean, do that.
Please start, Andreas.
Maybe we can help each other out.
No, I mean, starting, as you know, the green taxonomy includes 6 different items, of which 2 are completed right now, climate related. Then there will be, you know, circular economy, biodiversity, and so on the table, and they are all in the slipstream of the climate. Nobody took care about biodiversity before, frankly. And then the second big issue will be social. So it will be defined, you know, what is really a social purpose? What is a social impact financing? What is a social contribution that can be, for example, the promotion of disadvantaged regions, yeah, or disadvantaged groups of the population. And in order to avoid greenwashing, it will be pretty clearly detailed what we understand under a social financing and what not, as it is today already partially in the social bond principles. But the social taxonomy, of course, will be much more detailed.
Ullrich, would you like to add on that?
Yes, but only one small piece. I think as we are in Germany today, the social aspect inside the ESG is at this point in time not very much developed. Andreas mentioned we have a finalized taxonomy for 2 of 6 targets in the environmental space, the E. And we will see that there's an upcoming taxonomy for social in the future. But why I mentioned Germany, we have this German Lieferkettengesetz, Supply Chain Act, and Germany is one of the first countries in the world who has implemented such a law. On the European level, we only have a draft view on that this should come in the future in all territories, but Germany is the first one. And I think this Supply Chain Act is one very important first step into the social of ESG.
Right. I think it was Frank Alderson of the European Central Bank who said that striving for a green or low carbon economy is no longer a goal that's nice to have, but a must have. So that poses the question, is it mandatory for the financial service industry to support the transformation towards a greener fashion industry? Ullrich, I think you have some examples from the regulations that you'd like to share with us.
Yes, I would like to say a clear yes to that answer. It's absolutely mandatory that the financial services industry is taking care of these by the regulation, helping to transform the fashion industry as well as other industries in this case. Yeah? As I mentioned before, for me, the most favorite regulation we have is the ECB guideline. That is taking care about the risk management of the banking industry as well as the other financial services industry. I will focus on banking from now on. And it's very simple that the regulation is asking the banking risk management to take care about sustainability in a whole, starting with, once again, environmental, but in a later case, also social and governance. And so there's a very clear demand from the regulatory side that a bank needs to consider which project they are financing. Are they ESG compliant or not? It is possible, of course, and we will see, from my point of view, we will see some niche banks who perhaps will focus on those brown project financing, because we, in the end, we need all industries in the future, but there's a clear demanding focus on sustainable projects to be financed in the future. So the fashion industry will be asked with clear questions whenever they are taking care about a new project. What are the sustainable goals in the project? Why is it ESG compliant? And those things and those questions must be answered in the future if you are talking with your financial services industry to finance these projects. So very clear, there's a huge pressure on transforming the whole industry, including the fashion industry, into a sustainable industry.
Right. I think, Vicki, you wanted to talk a bit about the role that the consumer plays in that, but actually putting pressure on the financial service industry here as well.
I think actually you could look at where the consumer is putting pressure on both the financial services industry, but also on the fashion industry, and that in turn can connect to the financial services industry. So where you've got customer pressure, this can come through very clearly, and this was just mentioned in the previous answer, I think very well, in terms of the end client. For a professional investor that we deal with, their end client, as well as their asset owner, are giving them tremendous pressure to improve their sustainability processes, which includes understanding the companies that they're investing in and understanding what the companies are doing from a sustainability perspective. So transparency and disclosure is also a very big part of this, and that's tied into the regulation. But the other thing I wanted to say is, and speaking more from a financial services perspective, if you have a customer who is changing their behavior, and if that customer is demanding more about sustainability practices from a retail company or from a brand company, that will then translate into competitive pressure or sales pressure or earnings pressure from the company perspective. And that is the type of thing that a financial services investor or a research analyst such as myself will be very focused on, because the customer may be forcing changes to that industry dynamic or industry model, which then the financial services industry is going to be paying very close attention to, and very generally speaking, might be rewarding the companies who are addressing those sustainability concerns and putting pressure on those who are not.
Right. Andreas, do you have anything to add to that?
I think Frank wanted to state something before, sorry.
Go right ahead.
No? No, I think I mean, we have pressure from the investors, of course, but that is not, it's slowly evolving, I would say, in terms of sustainable investments. as it was also on the side of the corporates, honestly, even last year during Corona. But now we see a very strong demand for information, for advice from corporates, because they are very often in the middle of a value chain. And what happens is that the basically end producer or the seller, they are putting huge pressure on their value chain now, and asking them from one day to another to provide proof, certificates of any kind, ESG ratings. Otherwise, they are out of the value chain, and that means they have to adapt their business model fairly quickly, and often they don't really know where to start. I think that is why there is a lot of pressure now from all sides. And as said, while the more the larger multinational corporates are of course advanced, the big issue also in the fashion industry is with the the mid-sized one, probably 50, 100, up to 500 million, I would say, that are not so specialized. And as I mentioned, we have developed an advisory tool called Sustainability Industry Heat Map, where we go with the specific industry questions. We discuss that with the client. For example, we also have that for the fashion and textile industry, and identify action measures before we talk about any product, any financing, any Schuldschein or supply chain finance. And we see we will do actually a couple of thousand of these discussions with our corporate clients this year. There's a huge demand in this.
We have a couple of questions from the audience. Ullrich, you pointed to the fact earlier that Germany is, in a sense, a quite advanced market when it comes to sustainability. It's been on the table for quite a while. They're pushing for things to really change. Is sustainable investment a worldwide trend? What do you say?
I would like to say yes and no. First of all, clear yes. We see a global trend in sustainability and sustainable finance. Why no or not so clear? Europe is here for my first time in my life. Europe is really ahead because European Union started their efforts in 2018 with the mentioned action plan. And during that time, US, Asia, China was, from my point of view, really behind that. 2018 was a time of Trump era. So I can give you a practical example from my company, PwC. We had, in the past, we had 200 advisors in US for sustainability. And during the Trump era, we lost all these advisors because there was no work to do for them. But since this has changed, and you all be aware that US has mentioned John Kerry, a very famous guy from my point of view, to be the, let me say, sustainable officer for United States. And since that time, we really see a dramatic change. They are now developing similar regulation. They have announced that they will develop a similar taxonomy like we have in Europe. We have heard that China is developing a taxonomy. I see from my colleagues in Asia that there's also a lot of work in Asia regarding sustainability. So once again, Europe is, let me say, 1 to 2 years more developed, earlier developed than the rest of the world, but it's, in the end, it is a global process and a global approach.
Would you like to add anything to that, Andreas, Vicki, and Frank?
Well, let me start from my point as a corporate. Well, being a brand, a global brand available. That is something where the answer is, of course, it is a global trend for us. It must be a global trend for us because, first of all, we are doing our sourcing on a global basis. So our suppliers are sitting mainly in Asia, but we do also our sales on a global perspective, and we cannot treat a customer differently only because he's sitting in another market than in Europe. So that is a global trend, and that's also something what has been very fashion industry specific, and as we often pointed out already, especially the fashion industry is working together with a lot of suppliers, with a lot of third-party suppliers. And that is also where companies like us do have a certain responsibility. And the responsibility does not end in providing any requirements, must-haves from the supplier side, but we also have to help them that they can really achieve these must-haves. It cannot only be that we are doing saying, hey, you have to deliver, and however you do that, it's not our business. So here we have to really support that, and together with the banks innovate on structures which really help our suppliers. For example, when it comes to supply chain financing, and that is important. We cannot only be the ones who pull up requirements. We have to also help the whole supply chain.
Andreas, any additions to that before we move on?
No, indeed. I mean, and I'm happy that it's becoming an even more global trend now. I mean, especially looking at the US and also the US banks. I've been working for a couple of years in Asia and running our bank business there. And that's roughly 5 years ago now. And there was not too much. I mean, despite, there was a different approach of environmental protection, as you know, in some of these countries. But I think that is changing. First of all, in order to protect their own population, but also in order to be still part of the market in Europe.
Okay, because we are coming near the end of our panel, so let's move on with the next question, if that's okay. If you are a fashion brand at this moment in time, or a startup, and you seek investment, what kind of info should you be able to provide, and how important is transparency when it comes to that? I think we can go ahead with whoever wants to answer on that question first. Ullrich, how about you?
Sure. I would once again start with the taxonomy that is in place in Europe. Taxonomy is something that gives us criteria, what is green and what is brown, or what is sustainable, what is not so sustainable. So for different economic activities, there's clearly defined what technical criteria needs to be in place in order to be sustainable. So if a financial services industry is going to finance any project, they will take a look into the taxonomy in order to know, well, what information do I need to have in order to decide whether this project is a green one or a brown one. And that is something where I can say, well, in the future we will see that the financial services industry is asking the fashion industry for specific new data that is in relation with sustainability, that does not need to be important in the past, but in the future we will have a lot of data issues coming out of sustainability in order to decide whether a project that needs to be financed is a sustainable project or an unsustainable project.
I think you also pointed to the pathways to Paris.
Yeah, that suits not perfect to this question, but it's an interesting one. We have 6 minutes. Very shortly, I think it's really an interesting project where we are bringing the real economy, the fashion industry, as an example, and the financial services industry together. It's a project that is sponsored by the Bundesministerium für Umweltschutz, BMU, and also with World Wildlife Fund, where we are taking care of something around 50 real economy companies, developing with them milestone plans in order to become net zero at any point in the future. Then we are building up these milestones plans, and then we hand over these milestone plans to the financial services industry, asking them, well, this is a plan of the company to become net zero in the next years. Would you like to finance it? So we are bringing a little bit together with this project the real economy and the financial services industry in order, what we would like to say, to help to transform the transformation.
So really a brand could look into that agenda that you're adhering to there to be inspired to get their own records straight and to find their own issues to tackle with, right?
Exactly.
Vicki, I think you wanted to comment on the pressure from lenders and how that contributes to financing for brands right now.
So we don't deal directly with lenders, but of course we hear anecdotally that there is tremendous pressure and that funding is either being withdrawn or becoming more expensive for processes or companies that are perceived to be more problematic from either an environmental or a social perspective. But I think going forward, if we just, again, tie together everything that's been said in this discussion so far, the trend is very clear. If you're looking for financing, if you're looking for financial services participation, companies are going to have to be extremely clear about what those sustainability practices are and where they have addressed problematic issues. Now, the other side of the equation is not just, again, the financial services industry, but it's to try and get a handle on what are your customers actually going to be doing in the future, because obviously there's a problem where if you look at customer surveys or what customers are telling you, any customer will probably say that they want to be more green in their purchasing decisions. What they actually do quite often is very different. But there is, of course, the possibility that this behavior really does change going forward. And companies are going to have to be reacting to that and making sure that they have a credible sustainability strategy to offer to customers. And then, of course, that circles immediately back to the financial services question, which is, what does the financial services industry support, either in lending cost or lending availability?
Andreas, I think earlier on you mentioned the sustainability industry heat map and how that's important. Maybe you can elaborate when it comes to the question of what should a brand actually do and adhere to, how that would be helpful to them.
I mean, we are going to basically introduce to you as a fashion corporate client about ESG aspects in general, the sustainable development goals, and then we go into specific questions that are relevant for your industry, that such as circular economy. How are you engaged here? Then labor standards and conditions, for example, of course, in the supply chain. Then the sustainable and responsible procurement of raw materials, water management, and management also of hazardous basically materials. That's just a few of the more relevant examples. And then we are developing a profile depending on your answers and show you where you stand within your industry. And that's and based on that, you can start to develop a sustainability strategy with KPIs, targets that are measurable, and that can build also a basis for financing instruments.
So there's an assessment, and then you act upon that assessment to get everything straight and ready for the future. All right, then. It's just 2 more minutes left for us. So thank you for joining me here at the studio via video and in the studio. It's been quite insightful hearing from your expertise and outlook on the topic. Thanks very much again. And I will point now to a little break that we're going to take, and then a keynote speech from Brother Paulus, a monk of the Capuchin Order and TEDx speaker and board member of Franciscus Foundation in Frankfurt. He is going to talk about fashion and values, and I look forward to that. See you later.